This is the Daily Market Comment by Reprieve. I'm Maria Pachardis. Thanks for joining us at XM.com. Global bond yields are creeping higher again after a brief reprieve midweek. The record issuance of government bonds and expectations of even greater borrowing to fight the pandemic have sparked a bond sell-off as the reflation trade gets into full swing. U.S. Treasury yields bounced back from their post-Fed minute lows to head towards Wednesday's highs. But it wasn't just Treasury yields that were on the rise, as European and Japanese 10-year yields jumped to multi-month highs. While the spike in yields does not appear to be worrying the Fed and other central banks just yet, it does appear to be spoiling the mood in equity markets. Up until this week, stocks have been boosted from the reflation theme, but the pause in the rally reflects concerns about how much higher borrowing costs will rise. Nevertheless, despite yesterday's losses on Wall Street, there is no sense of panic. Futures for the S&P 500 and Nasdaq Composite were flat at the European Open. Gold also took a knock from the global jump in yields. The precious metal hit a 7.5-month low overnight, but managed to recover as the US dollar accelerated its decline. The Greenback came under pressure on Thursday after jobless claims unexpectedly rose last week to the highest in 4 weeks, renewing doubts about the US jobs recovery. This only underscores the Fed's cautiousness about the recovery, and it seems to have touched a nerve with the dollar. The Greenback has now more than erased its gains from earlier in the week and is down 0.35% against a basket of currencies so far today. The dollar sell-off was broad-based, boosting all its rivals. The Australian dollar was the biggest winner, surging past the $0.78 level as it got an extra helping hand from the soaring Australian 10-year yield. The Kiwi and Euro weren't far behind. The laggards were the pound and the Canadian dollar, as sterling was held back by dismal UK retail sales numbers for January. A dip in oil prices dragged on the loonie. Still, the vaccine optimism and better-than-expected flash PMI readings were enough to push the pound above the $1.40 mark for the first time in 34 months. This was today's Daily Market Comment. Thanks for joining us at XM.com.